Hello traders and welcome to the SMC Trader. Today I will take you through a hedging strategy with the use of ICT concepts. We will be seeing how we can profit every single time by opening two positions against each other and how we can use ICT concepts in order to get into the best possible scenarios and how to close the losing trades so that in the end of the day we come into profit. Let's begin with a video. So guys, here we are for the other example that I'm gonna be showing on this channel, the SMC Trader. The previous example you can see if you go to my other channel, ChrisFX. Now, for this instance, for this example, I will be starting with the daily time frame and I will do the whole analysis here. I want to tell you, one beautiful thing with hedging is that you can have a bunch of pairs because no matter what you are trading, you will be winning 90% of the time. So if, for instance, there is no chance in one pair, there might be a chance on another pair. So you can add as many as you want, just watch out for the spreads and just know what you are doing. Here we are on GBP JPY, which I start liking a lot, to be honest, lately. What do we have? We have a swing low, this area right here, which is also a drawn liquidity. We have one fair value gap exactly right here, and we have one huge fair value gap right here. Now, let's see what will happen in this occasion. Okay, there are a bunch of things happening in this occasion. First of all, we grabbed this liquidity, we closed with the body below. What I will tell you now, I will be doing this example, let's say kind of in real time, and I will tell you, there we go actually, you need to have specific rules, and we are entering with the same exact rules that I'm teaching on the ChrisFX Academy and in the courses and everything, and here I cannot go back in time, but I will move to this example that we were beforehand and I will show you what I mean by that. Here we were. Okay, let's move all the way down again into this FVG. Okay, now the first entry could be somewhere here, but when I have a huge area such as this one, I'm usually entering lower. So there are a bunch of things that you can do in this occasion. Let's see if we have a change of character. Here we do have a change of character. Let's say that you want to enter somewhere right here on this breaker. Okay, you enter a buy right here. You are into the trade right now. Okay, and now you are waiting to see a little bit what is gonna happen if this is gonna be playing out. Okay, we see that we will be potentially breaking below this area. In this occasion, I will also open a sell. There are no stop losses in this occasion, guys. So I have opened my buy right here, and since I didn't see price respecting this beautiful FVG that you see on the 15-minute time frame, it did respect it once, but then it broke below. You can add a sell exactly right here, and here there is a difference already of 27 pips that you have to account for in this occasion. This is already a loss, let's say, of 27 pips. That's why you have to have a fixed plan with fixed lot size. In my occasion, I will be using, for a small account of $2,000, I will be using 0.1 lots. For my other account of $10,000, this is gonna be 5 times that, 0.5 lots. So this now, let's start and see what is happening. Okay, in this occasion, this now is getting into profit and this is in a loss. Let's wait, and when we will see a clear movement, let's say, we will decide what to do. Okay, here there is a bunch of things, there are a bunch of things that you can do. One of the things that you can do is to manage your position from these FVGs, but one better thing that you can do is to play it on the safe side and say, if price makes it back into this FVG, or if now price makes it into this remaining part of the FVG, which coincides with this daily area, this daily breaker, then you are willing to see what you are gonna do and how you're gonna be managing your positions. I will be waiting for one of those areas patiently, for one of those areas to be tapped, otherwise I will not be doing anything. Even when I see retracements such as this one, I'm not gonna be doing anything. I still have both positions open. So, okay, one thing that you can do now. Here we saw, I don't want to complicate it for you because here you technically could be entering again another buy, but we will not do that because we want to see a better way, to find a better way to manage those positions. I will be waiting for the story to play out. Let's go ahead to the daily in this occasion. And here on the daily, we see that we have broken below areas, such as this one. We have grabbed liquidity. Remember, both our positions are still open. Do not forget about that, okay? Both our positions are still open. This is in a loss right now of 91 pips, and this is in a win of 66 pips, okay? So we do not worry, our loss is just this gap that there is between those two. And just one thing that I can tell you that you can do instead of doing that, this has the pros and the cons, you can open the two positions instantly at the very same time. The reason why I don't want to be doing that always is that you might not need to add the second position, an opposite position, and you might just keep the first position without any anxiety. But it has pros and cons because now we would be at the very same, let's say, loss and win. For the time being, I will leave them as they are. So we have this fixed loss right now, which is running of 27 pips, which is $27, since I'm risking 0.1 pips. I will go down and I will tell myself what other areas do I have, what other points of interest, because I love using FVGs, and this is one of the points of interest that I'm very interested to in this occasion. So I'm letting price show me its hand. I'm not gonna be doing anything until we reach a daily fair value gap. Oops, there we go. That was quite fast actually. So in this occasion, I will scale down to the 15-minute time frame again. I have those two positions still running, guys. So this is in a massive loss and this is in a massive win. But all I have lost until now, and I'm still in a loss of $27, nothing more than that. This, nonetheless, has made me until here. This is a 750 pip move. So this has made me $700, let's say, and $50. And this is 750 minus this, actually plus this. This is in 776 loss. So I am losing in this occasion more than I'm winning still. Well, I will be waiting for a deeper retracement into this FVG, and I will tell you how I'm gonna be managing this thing. Okay, now none of this qualifies for me closing the trade according to my own strategy. And this is the beauty of my own strategy, because I have very specific rules regarding if I'm gonna be closing a trade or not. Here there was probably some kind of news or whatever. Anyways, in this occasion, what do we see? We grabbed even more liquidity. Okay. And at the very same time, we tap into this FVG and we reject this FVG. Now, the important thing here is, when I see that, let me check it out. The important thing is that on the 15-minute time frame, now this for me does qualify for a trade possibly, which means that at the very same time, it does qualify for me closing this whole trade right here, this win with $1,170. So until here, guys, we are dollars plus 1,170. as we said. Okay, and we are minus at this very same time. Let's do it. It is 1070 plus 27 minus 1197. So I closed the sell position right here, and the buy position is in this loss. Now there are a bunch of ways to manage all of those things, even if you would decide buying over here for whatever reason, which I was not gonna be doing, of course, but still you could be managing this thing, and we are gonna be teaching all of those things. You have made this, you have closed this position, so your loss is still this $27, because this minus this does $27. So technically until here, you are minus $27. But of course you don't know if this is gonna be keeping going down or not. You don't know that. That's why there is a lot of experience coming into this thing anyways. Or you might take a very small loss. What I'm gonna be talking about in this occasion, we are minus $27. We are minus $27 right here. Okay. Now, since I expect a retracement after this whole movement towards the downside, what I'm gonna be doing, I'm gonna be going to the daily time frame again, and I'm gonna be telling myself, if this now finally reacts from here after this huge move where we also entered, this huge move of 1400 pips, guys, where is it likely to go? Since I'm messing with FVGs mostly, I will be looking now at this FVG. So let me delete now that, let me delete that and that at the very same time to clear this chart. So what I'm willing to do is to close this position either here or above. Well, in order to be totally realistic, the position, I would love to close this position over here on this daily breaker. Let's see now what happens. I am on the 15-minute time frame. I keep going and going. Okay, you might claim that already after this rejection you might be considering closing. Well, the best thing to do is wait for your zones. You will be making way more money that way. And I will keep proceeding on the 15-minute time frame as you see it right here. There we go. Now the beautiful thing right here, okay, in this occasion, to be totally realistic, and according to my rules as well, marginally it would qualify to close the position right here on this bearish candlestick. Let's see now. The loss now will become, okay, the loss now will become, this is the buy position that is in a loss. We entered exactly right here. Do not forget that. I will place a horizontal line on the point where we will be closing the buy position in a loss. So the loss right now, the fluctuating loss, remember we have closed this profit, but the loss now has been minimized. Why? Because price has come back. So the buy order now is closed here instead of here. If I just measure it from this exact point, let's take a straight line from this exact point. Let me delete all of those things. And if I measure from here until the other line, this does 486 pips. Plus the 27 that we had fluctuating. So 486 plus 27, because we opened those positions with the difference of 27 pips, this is minus 513. I just close right here. I would close right here. And then YouTube traders are gonna tell you they would close all the way up because they see in the future and they know that they would close it in break even, this other position. Well, because I'm not a magician, I'm just a very good trader, that's all I am. This is plus 1170 minus the 513, and I will also add minus the commissions, which are minus $2 also. So we will do it minus 515. So with this whole thing, and with very robust rules, of course, if you try to do it without knowing the rules that I'm teaching, which you can find if you register in one of my programs, or you can just let me trade your capital in the PAM account with my capital, and you just chill and you take the profits. Nothing more than that. This will give you a win of plus $655. Let's check it out. Now, this doesn't exclude you from trading more pairs at the very same time. You could be hedging more pairs. So from these two movements, you made this plus 655. Now, one important thing to check out right here is how long did it take from our entries? Our entries happened exactly right here. How long did it take from here until, wait, let's do that, until we closed our profits? This is a $2,000 account, by the way. It took 13 days, guys. 13 days and 7 hours. It is not that much, guys. On a $2,000 account, by managing risk properly, you have made $655. You know how much return is that in this account? It is a 32.5% return in your account. This is absolutely spectacular. Now, what I will tell you, there is a chance that here, of course, you might tell me, this happened to happen here with your rules, Chris, but what could have happened is that the price could be continuing towards the downside. What happens there? Two things. One, you can repeat the process here and leave this fluctuating loss because you have already closed profits. Do not forget that. Okay, you can still, let's say, buy down here, opposite to this other, or you can sell and buy at the very same time. Or what you can do is have a fixed stop loss in your mind. Risk percentage, this is what I mean. So you might say that if this moves now 100 pips after all this analysis, if this moves, let's say, or you can have something different, let's say, whatever you have as an amount. If this move those, if this moves those certain pips, let's say, against me, after I have decided to close it, then I'm not willing to be in this trade anymore. Okay, so of course you can say in this occasion, if you were on a smaller time frame, this is a huge movement that happened right here. There's a lot of volatility. You might say that from whichever point, I closed this one, plus 100, 200 pips, whatever you want, I'm willing to lose. Let's say 200 pips would be something good to do, but you have to regulate your lot size. Okay, so in this occasion on a 2K account, of course, a 0.05 lot would be way more appropriate because this would be, let's say, 100 loss. It's still a lot, but you will be winning 90% of the time. You will be demolishing those losses. Do not worry about that if you know what you are doing. So this is exactly how to hedge. As you see right here, this is one of the ways to hedge. This is how I'm gonna be managing the accounts. If you register through my PAM program, which you can find in the description, where I have $10,000 of my own money as well. And of course, if you want to learn all about the ways I'm entering and I'm exiting, go ahead and enroll in one of the programs. The best thing to do is to get a one-on-one mentoring with me. And of course, the Academy is exceptional as well. Furthermore, subscribe to the SMC Trader, like the video, share it with your friends. This is gonna do it for today, traders. The SMC Trader signing out.